Our next company on today's Red Chip Fintech and Digital Asset Treasury Virtual Investor Webinar is Oren Hershkovitz. He is the CEO of Enlivex, ticker ENLV on the Nasdaq. Oren will begin his brief presentation in a moment, and then we'll open this event again to your questions. I'm going to keep everyone's lines muted throughout this presentation. To submit a question, please use the Q&A button at the bottom of your Zoom window. As always, before we begin, please allow me to read the brief safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Oren, thanks for being here. Please go ahead.
Thank you very much. Pleasure to be here. So let me start with doing the technical stuff of sharing the deck. Let's see that we overcome that, and then I can go ahead.
That's perfect now, and right now.
Brilliant.
You got it. Thank you.
Okay. So, hi everyone. First of all, I'm genuinely excited to be here. This is a fascinating event, very innovative companies, and we're happy to be part of this. So for those of you who are not familiar with me, my name is Oren Hershkovitz. Again, I'm the CEO of Enlivex. I've been the CEO of Enlivex for the past more than 6 years now. Over time, I must say that I've seen doing drug development for so many years. I've seen really how hard is it to build a value, and how challenging it is. And sometimes you really need to think out of the box. And what we're doing at Enlivex, and I think what I'll show you today is exactly that, how we did think out of the box in order to combine deep scientific drug development research along with new financial data-driven instruments. So, just to know that there's a little, there's our forward-looking statement. So have a second look at that safe harbor. Okay, so maybe just again, from the context perspective, Enlivex is listed on the Nasdaq, as mentioned here. Our ticker is ENL.
Okay.
Our ticker is ENLV.
Oh, yeah, I appreciate it, man. Thank you, brother. I'll talk to you, man.
What's going on with
It would be nice if you could mute the participant. Thank you very much. So I want to start this presentation, with giving high-level overview of what makes Enlivex so unique and different, and what truly defines us today, right? So actually, our strategy is built on two main pillars, or actually three fundamental legs. The first one is actually the exposure or the upside participation of Enlivex in prediction markets growth. And this is also rely on our built-in impact engine that we'll talk about today. And the third leg is actually our very unique embedded high-yield option that we'll elaborate as we move along. I think together all of those three legs essentially generate a potential long-term value to our shareholders. And I'll try to elaborate on this presentation, what I mean by that. So we said prediction markets, right? So let's kind of take a deeper dive into what prediction markets are and why we're so excited to be part of what we call prediction markets. So prediction markets are basically markets that are currently using collective intelligence in order to predict the outcomes of events, right? And we'll go deeper into exactly what that means, but what we all know is that it's a sector that is exponentially grow in a way that it's currently maturing and becoming a potentially highly profitable differentiating sector. Now, as of today, Enlivex is the first and only stock that currently provides investors with the upside participation in prediction markets growth and in a way that has a built-in impact engine. Now, we see this, we actually participate or see the upside of that through our accumulation of what is called a RAIN token, and which is a decentralized protocol relying sit on a blockchain and eventually is decentralized prediction market protocol, and we'll talk about it again. Part of the strategy is directing some of the gains from the treasury itself, from the RAIN asset treasury, into the development of really breakthrough therapies, which is what we have been doing for several years. And we're designing those therapies, our platform, Allocetra, in order to treat patients with suboptimal, that currently have suboptimal treatment options as of today in billion-dollar market, and eventually generating, potentially better global health. The last point here is really about a very unique option that we have, and I'll take a deeper dive in that in a second. So going back again to a more detailed explanation of what prediction market is and why it is so exciting. So it's essentially, this is a platform that facilitate contracts that value probability of outcomes of future events. And the idea behind it is that participant can buy and sell shares tied to different possibilities, different results that could allowing the market as a whole to estimate how likely is that a certain outcome will become for a specific event, will materialize eventually for a specific event. It could be any market, any event that we're talking about, could be sports or politics. And as you can see on the right-hand side of the slide, the prediction market actually was the one that foresee that Donald Trump will win the election. There is substantial academic research data suggesting that prediction markets, as an aggregate information from a variety of sources, or collective intelligence, as we say, could potentially be more accurate than a single source, whether it's an expert or our traditional forecasting models. So this make this markets really a real-time and data-informed forecast about probable outcomes, right? And it is becoming a part of the present and definitely part of the future. So now that we understood the concept of prediction markets, let's pause for a second. And when I'm talking about this, you may think, for those who are less familiar, that this is still a kind of exploratory sector. But what we've been seeing in the last few months is backup and validation of the prediction market sector by institutional investments and top-tier funds. So the two major players in prediction markets are currently what we call centralized prediction market companies, which is Polymarket and Kalshi, worth today billions, as you can see here. Now, as I said, institutional backing of prediction market has occurred in the last 6 months and so, validating that this is no longer an experimental, markets or something like that, validating them as markets that will grow and become substantial part of our present and future. So Polymarket, for instance, there was a $2 billion investment by the Intercontinental Exchange, the parent company of the New York Stock Exchange, in Polymarket, $2 billion fundraising in a valuation of $8 billion, and Kalshi had $300,000 financing at a $5 billion valuation, led by top-tier funds like Sequoia. Actually, in December, there was an additional round of $1 billion and an $11 billion valuation. So clearly, this signals the market that prediction markets become a stable markets that you really need to take care into account. Now, so we talked about prediction market. So what is RAIN, right? So, and maybe in order to explain what RAIN is, I'll use an analogy. And the analogy is Netflix and TikTok, right? So all of you are familiar with Netflix. And that Netflix is actually creating its own content, right? It's a content creator that in a centralized way, and Netflix is investing a lot of money, estimated around 2 to 3 billion a year, to generate a relatively limited amount of content. And you know, we all subscribe and we can see the content and we are very happy. And this is one model, right? The other model is the TikTok model, where really the TikTok itself is not generating not the content and not the liquidity, but actually the global users, hundreds of millions of global users are using TikTok and actually generating the content themselves, right? It could be a 12-year-old girl from Hungary or whatever, you know, generating some kind of content and people are watching it. So that generates the liquidity. As a consequence, actually, TikTok is not investing money in generating the content, but substantial lower amount of money just to maintain the network, right? And both of them are great. I mean, TikTok are actually for the long tail users, more focused for the long term users, and essentially, RAIN is the TikTok of the prediction market because RAIN protocol is permissionless protocol, allowing anyone to create a market and trade over that market. It could be anyone from anywhere in the world, in any language, for any market whatsoever, right? So essentially, similar to what we know from TikTok model. Now, the market's eventually outcomes are AI resolved, and the platform is, as I said, governed by the RAIN token. And the RAIN token is actually even more interesting than that in the sense that it has a built-in deflationary buy and back burn mechanism, and we'll talk about it because this is a really essential piece. So what does that mean? Okay, so the protocol itself applies, a 5% fee over the total volume of each market. So half of it is allocated to the market creator and the liquidity provider and so on, but half of it is also used in order to buy back the tokens from the open market and permanently burn them, or in other words, to permanently remove them from the market. So as time goes by, eventually the supply and the value of the volume and value of the RAIN goes up. There's less and less supply. So you have this scarcity occurs, and eventually to the fact that there is appreciation of that in the token or the coin price. For those of you who are familiar with Binance, this is more or less the same deflationary model as we see as happens there. Now, this applies that a company like us, so Enlivex, which will, as you know, within time, we expect eventually our holding of the RAIN token will become relatively larger and larger and more valuable. So to compare again, RAIN token to calcium polymarket, you know, again, in RAIN, you can use any language. It can occur anywhere from any place in the world, in any language. Anyone can create a market in a simple way. We talked about the liquidity, and it's global. It's not restricted to specific countries. It's not US only in English and so on. It's really, really global. Now, polymarket and Kalshi are great. What we think is that eventually, clearly prediction market seems to continue and grow in an exponential way. And RAIN will live alongside Kalshi and polymarket just as TikTok lives alongside with Netflix. I think that by this time, hopefully by this time, I was able to convince you that, or at least clarify why we got so excited about taking the upside and exposing our investors into the rain and the prediction market in generally. And what we're aiming to do is really to drive what we call a dual engine shareholder value. So this will be done by becoming the largest corporate holding RAIN and activating it for yield, while continue to develop our breakthrough therapies. And I will say a few words about that as well at the end of this presentation. We're aiming to accelerate institutional adoption of RAIN as it becomes the center of global prediction markets. So I mentioned before that we have a really unique differentiating value proposition, and as part of our strategic partnership with Rain, we actually obtained an exclusive option to acquire up to more than $900 million of Rain. This will expire by the end of November this year, but the pricing was at the average of last November, which was 0.0033. This is already at the current, compared to the current market price of the RAIN token, is suggesting that there is a substantial increased value of that option. And we believe that, we can potentially raise additional money and purchase additional RAIN tokens and this substantial reduced price, generating additional yield and value. So as part of this transaction, we also retained few advisors that help us with the crypto sides, and most importantly, Mr. Matteo Renzi joined our board. For those of you probably familiar with Matteo Renzi, Mr. Renzi was a former prime minister of Italy, and is currently an active member of the parliament, and he definitely brings us value in terms of leadership moving forward. So a few words about the clinical development. So this is our legacy operation. Allocetra is our immunotherapy platform that we develop in order to treat the untreatable, in the sense that we're focused on inflammatory indications, either acute or chronic indications, such as osteoarthritis. For those of you who are less familiar, osteoarthritis is a condition where you have cartilage degradation. It's a low-grade inflammatory disease that usually manifestate in the knee or in other joints. And you all know people that eventually go through knee replacement surgery and such. This is usually because of osteoarthritis. Currently, osteoarthritis has no effective treatment. And we have developed our drug Allocetra to treat those patients. We have several clinical studies, with the leading one that we just announced the 3 months and 6 months top line data in this study, clinically meaningful data, statistically significant data, showing relief in pain and improved function of those patients. And alongside with that, additional data demonstrating the mechanism of action of the drug. This is just it's a big slide with a lot of data, but eventually what it implies that we saw from a pain perspective and functionality perspective improvement, which is clinically meaningful, statistically significant, in what we call primary age-related osteoarthritis patient. Very, very excited about this data, and we announced that we continue now into a randomized controlled phase 2b study. And this study eventually will support our pivotal phase 3 studies. Just to kind of summarize this, really, we demonstrate already in 25 clinically meaningful data. We're moving into a phase 3 study now for osteoarthritis. Again, it's a growing market, estimated to currently for a $7 billion market, expected to substantially grow to $15 billion in 2030. And so those two pillars are together generating our shareholder value. And I'll pause here and thank you very much.
Oren, thank you very much for that exciting presentation. We are now going to take questions from the audience. Press that Q&A button at the bottom of your screen and type in your question. If you have we cannot take your spoken questions today, so just use the Q&A button, and we do invite your questions. Oren, we've already received a few. Here's the first one. How should investors most accurately think about your company today? Is it a digital asset treasury company, or is it a biotech company, or some combination in between?
Well, that's a great question. Yeah, I appreciate the confusion. Clearly, this is kind of out of the box, very innovative move. What I can say is that you're entering 2026 with two powerful, I guess, mutually reinforcing pillars, right? The first one is the late stage clinical development program that we have with Allocetra that I mentioned. Really exciting, compelling, meaningful, durable data. And the other one is the treasury strategy that seeks to harness the potential of prediction markets and the digital assets, anchored in RAIN. And I think you should look at investors should look at Enlivex from both pillars, right?
Oren,
Yeah.
what convinced you that prediction markets represent one of the most compelling next phases of crypto adoption?
Okay, I hope I was able to to convey what convinced us, but maybe I'll take a step back and say, when we evaluated our digital asset treasury strategy, we looked for different assets, different coins, but we wanted to generate something that will really be differentiating and could grow and generate shareholder value. And we definitely chose prediction markets. You can see that it's one of the first crypto, I guess, applications that demonstrate both the structural utility of the concept and strong real-world adoption, which is not speculative anymore. It's really kind of backed up, as I said, by institutionals, and you can already see that there are major, trading volumes, substantial amounts going in prediction markets. And we think that it will continue to grow, and we were totally excited with the added value that the RAIN decentralized protocol provides as complementary to that market. And that was eventually what led us to select prediction markets as part of our upside exposure through the RAIN.
Oren, you have described RAIN as the Uniswap of prediction markets. Could you elaborate on that, please?
Yeah, I didn't have time to go through the presentation, but we did. We are talking about it clearly. For those of you who are familiar with Uniswap, what Uniswap is doing is playing. It turned tokens, I guess, into liquid, more tradable markets, and mainly serves the long tail. And I think RAIN does the same. It plays the same infrastructural role for prediction markets, right? So as much as Uniswap coexists with the centralized exchanges, we believe that RAIN will coexist with the centralized prediction markets. So that's why it's a very, I think it's a very good analogy to Uniswap.
Oren, RAIN's built-in buyback and burn mechanism. It's a central part of your thesis. How should investors think about the relationship between protocol usage and long-term token supply dynamics?
Yeah, so first of all, maybe before I explain that, you know, I did try to explain it through the presentation, but again, you think about this, that the buyback and burn mechanism is, directly linked to the protocol usage, right? And generate token scarcity. And as activity continues to grow, eventually what that means is that you have higher volumes, you have more fees, you have more RAIN tokens being purchased and removed from the market permanently, right? And this creates what we call usage driven deflationary dynamics, right? So you have growth in real economics activity, which reduces long-term token supply, right? Rather than diluting it, right? Again, for those of you who are familiar with Binance, that's exactly the case there. So the buyback ties the protocol to supply reduction, but this makes us, Enlivex, as a long-term holder, the natural beneficiaries of that strategy.
Many investors are familiar with companies that simply hold digital assets, or how is Enlivex's active treasury strategy designed to outperform simply holding RAIN tokens passively?
Okay. Well, again, we just as a reminder, we have this option, right? That I've talked about, that per our agreement with the RAIN Foundation can eventually could be exercised currently compared to the current price, reflecting a substantial discount to the market. But I think, and this is very unique to DATS companies, I think that there are various ways that we are familiar with to generate value from holding the RAIN token. And as it grows, if we're talking about staking and restaking, loaning them, and so on. So there are various ways to generate yield from holding the asset itself. It's a good question.
About the biotech aspect of your company, Oren. What do you expect from that phase 2B study and the implications on that pivotal phase 3 study?
Okay, so I wish we had more time to take a deeper dive in that. I think we had really exciting results. It's not just we did, we're working with key opinion leaders in the field of osteoarthritis that supports our development, are also excited about that, representing the data in conferences and so on. So the data we generated from the phase 2A study was substantial. It was really clinically meaningful at endpoints, which are what we call the phase 3 pivotal endpoints, right? And now moving into a phase 2B study in this underserved new osteoarthritis patients, I think we're really excited, and we believe that if we just replicate similar data generated now from the phase 2A study, that will support discussions with the FDA, with EMA and other regulatory agencies, and pave the way eventually to pivotal phase 3 studies, and ultimately making them accessible globally.
Thank you very much, Oren. If you could just sneak in a quick, maybe 20-second answer to this final question. You highlighted that exclusive option to acquire RAIN at a fixed price through this year, 2026. How should investors think about that embedded option when evaluating your company versus direct exposure to crypto?
Well, I think that's the upside. That's part of the upside that we were talking about. I think I mentioned that already. So clearly we can do additional funding and purchase as part of that option, additional tokens and substantial discount. So it's kind of you can look at that as a implied warrant-like, and I think it has value, substantial value that investors should take into account, definitely.
Perfect answer in the perfect time frame, Oren. Thank you for taking those questions.